Hey, it's Brian at the Economic Report. Thank you for joining me for today's story. And you're lucky to be here because we're talking about the 3% trap. Yes, folks, it is the 3% trap that now it appears as though the Fed is going to accept 3%. Yes, folks, 3% inflation because they're going to start lowering interest rates with the understanding that 3% inflation is in the cards, and they're much more worried about employment and tapping that down before they see inflation getting under control. So you're not going to want to miss today's episode, in part because we're going to get a little bit more clear about what exactly is going down, and maybe more importantly, how you can hedge against 3% inflation, because it appears to be the new norm, and that's going to affect every single one of us. So here's the simple version. Inflation is running about 3%, and the Fed seems willing to live with it. That means you now need to earn at least 3% in your investments, get a 3% raise, do better in any other kind of hedges you have against inflation, like maybe your gold, maybe your crypto, maybe your real estate investments, but you get the picture. Old world, the savings would be around 2.5%. But I'm here to say that wasn't great, but you weren't falling behind. But now, unless you're making 3%, you are getting run over by inflation. So that single percentage point from 2% to 3% is like adding weight to a treadmill. You feel like you're moving, but you're really stuck in place. So let's check this out. First thing we're sharing with you is actually from Trading Economics, and it says that the U.S. annual inflation rate accelerated to 2.9% in August of 2025, and it is like the highest since January, after holding at 2.7 in both June and July, in line with market expectations. Why should you care about this, folks? Well, it says prices rose at a faster pace for food. Hey, can you relate to that? And 3.2 versus 2.9% in July. Used cars, if you're in the market for purchasing a car, 6% versus 4.8%. And folks, new vehicles, 0.7% versus 0.4%. And maybe to make things just a little bit more aware of what's going down, but check this out. Energy costs increased for the first time in 7 months to 0.2 versus negative 1.6%. So I'm here to say, if you're feeling a little bit of pinch, you're not just imagining it. It's very real, and it's hitting people just like us. But of course, let's go ahead and dig into this a little bit more, because there's much more to the story. And of course, maybe most importantly, we do have ways for people like us to take action and make sure that we're hedging ourselves against this inflation. And of course, what we're sharing here right now is just some highlights that have been discussed over the past week or so. But now that the market's had a chance to kind of chew and digest on these things, I think there's some important things that we must conclude. Number one, that the Fed cuts policy rates by about 1/4 of a percentage point, and that's usually good news for the economy. But there's more to it, and this is kind of the sticking point. Policymaker projections show that 2 more cuts are in for the remainder of 2025. So far, so good. It sounds like we could be getting 0.75 total cuts towards the market rate, right? And that also seems pretty good. But I want to make sure that there's something else that's looming, and this is what we want to pay close attention to, because once again, the idea of lowering interest rates is usually super good for the economy, but those are usually done if and when interest rates are under control. And we take that back when inflation is under control. And right now, what we've shared so far shows you a lot of things are under control, and inflation isn't one of them. So we want to be super cognizant that this is something that we really, really want to pay attention to. I mean, let's be honest with you. How many of you are feeling the pinch when you go to the grocery store? Every time I'm at the grocery store, I play over and under with the cashier and I throw out a number. I try to pay attention to what I'm paying. And like almost every single time, it turns out I'm paying more. Maybe you can relate, but let's go ahead and dig into the story just a little bit more because we do need to hear what Chairman Powell has to say. And then, of course, finally, what we really need to do is come up with a strategy like how do people like us here on Main Street deal with these issues?
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending.
Because, of course, now what we're looking at, we're paying very close attention to, like, how do people like us on Main Street really figure out a way to beat that 3% inflation, even with the rates being dropped? And we have a few ideas. Once again, this is not necessarily what we would call financial advice per se. I'm a guy on the internet. However, I do want to say that we do look out for the people who follow this channel. And so here's a couple of things to take consideration of. And I'll throw a couple of asset classes out there to pay attention to. And we really want to be mindful if these things have beaten 3% this year or not. And so we can go ahead. I'm just going to mention them off the top of my head. Cryptocurrency. Like without a doubt, the big 5 cryptocurrencies have beat 3% inflation this year. So far, so good. We know that precious metals, gold and silver, have beat inflation as well. So that's good. So far, so good. We can also make a really strong case that our different financial vehicles, as in stocks, have beaten inflation by and large as well. Then we're talking S&P 500. Now, when it comes to housing is most definitely beat 3% inflation as well. And of course, the big thing is, I always throw this out to my viewers because finding ways to invest in you, chances are you are the best person to beat that 3% inflation. And so with that, I just want to make sure that we're giving you some thoughtful insights about this because once again, we're at the economic report where we take Wall Street economics and DC politics and try to come up with practical solutions about what's going on in our finances and, of course, in our day-to-day operations. Okay, so just some takeaways here. Here's how we can fight back. Once again, I want to remember we're investing smarter in finding ways. Like CDs aren't going to cut it. Savings accounts aren't going to cut it. And so I just want to make sure we're being thoughtful about maybe not where to put your money, but at least what to avoid. Sometimes that's the best decision we could make. Another thing here is real assets really do matter. Once again, housing, commodities, gold, silver, things we've just mentioned here before. So just understand those are some powerful, powerful assets that can beat 3% inflation. And of course, folks, I want to remind you that investing in yourself really is a powerful, powerful tool of leverage. Think about it this way, David fought Goliath and, the story of David and Goliath, Goliath is the giant out there, right? And David's just the little guy. But what made David so powerful is he found a way to leverage himself. He was never going to stand toe to toe with a giant, but he used a sling, he used some intelligence, and he used stones, and of course, some divine guidance to pull him through. And folks, I think that's the kind of stuff people like us are going to need to do here over the next year or so, because this could be a tricky market. And of course, I promise you, as Brian from the Economic Report, that I'm going to continue to follow these stories. And I want to know that you matter as an audience, but of course, your comments always matter here as well. So make sure you're dropping comments below and let me know what you're doing to beat 3% inflation, because your thoughts, your ideas matter. And of course, when we cover things on a regular basis, make sure you like and subscribe, because your thoughts matter very much. Thank you for joining me here at the Economic Report, and I will catch you soon. Have a great day, and thank you for joining. And folks, don't forget, the biggest battle we fight is the one between our ears over our thoughts, our actions, and our attitude. Smile, say hello, and make somebody's day. Have a great day.